What's going on, guys? It's Andy here. Welcome back to another episode on the Andy Kandola Show. So I want to go ahead and go over this topic as far as why it's so hard to focus on dividend investing, and why is it that we all want to go ahead and make money, but it's just extremely hard to focus on making money. And what's the reason behind all this? So I want to go ahead and kind of look at the psychology of dividend investing and why I believe dividend investing is actually one of the best ways to go ahead and invest in the stock market. But exactly why is it so hard to go ahead and invest in this type of way? So let's go ahead and kind of jump into this topic here, guys. Now, if you are new to this channel, I do focus on dividend-based stocks. I call this my bucket list portfolio. Basically, within this portfolio, I have 52 stocks. All of these stocks are focused on paying me out dividends, as well as all these stocks do have a potential to go ahead and grow over time. Now, I like to focus on this type of strategy because I like to build income in multiple different ways. So in this case, I am building income by the growth in the stock price, as well as when these stocks are paying me out dividends on every single month, I'm building additional income here. And as we can just see from the screen here, I've been consistently getting dividends. And just in the last week here, there is dividends from Procter & Gamble, from Hormel Foods, from Realty Income Corporation, from Pembina Pipeline, from Main Street Capital, from Costco. So these are some of the best companies out there, and some of the companies that have been consistently paying their dividends or have been growing their dividends. But why is it that this strategy is so hard, and why isn't it so simple to go ahead and just develop this over time? Now, guys, I get challenged with this all the time. I keep up with all the news, and basically just watching the news on a day-to-day basis, or watching other YouTube channels as well, there's many different stocks that I want to go ahead and invest in. And here's the thing. The fear of FOMO just comes in play. The fear of just missing out. And one of the stocks that I've just been itching to go ahead and invest more in, but because it's not fitting my overall strategy, I just haven't been able to push the plug on this, is going to be a stock like Tesla. Now, Tesla is a stock that actually climbed over 700% just in this past year here. Now, if we just look at Tesla here, I mean, it's over 731% in the last 1 year. And I wish at one point I did buy into the stock, but here's the thing. Look at the dividend. There is no dividend on the stock. This is a pure growth speculative stock, but in general, guys, this really does not fit in my overall strategy. So the FOMO part definitely comes in, where I do want to go ahead and invest in a stock like Tesla that has such growth potential, but until it goes ahead and pays out a dividend, I'm not sure if I'm going to be adding it into this portfolio. Now, here's the thing, guys. There's so many different ways to go ahead and invest in the stock market, and because we're following other people or watching other people see and make more money, it's just extremely hard to go ahead and stick with a strategy. Now, in my case, like I mentioned, I focus on dividend stocks, and I basically have 11 different sectors broken up in my portfolio, and these 11 different sectors have multiple stocks within them, but they're all focused on dividends. Now, yes, I've actually day traded in the past, and I've done swing trading, I've done options and futures trading, but I can tell you guys, every single time that I've changed my strategy, there has been a reason why I changed it, and that's because none of those strategies work long term. Now, we all want to get rich quick here, and that's basically what the internet pushes on us, because we want to figure out the easiest way to go ahead and make money. But I'm just going to be honest with you guys. In my time in trading, I've been trading in the market for over 15 years at this point, and I can tell you guys, there is no get rich quick scheme, or there's no easy way to go ahead and get rich quick in regards to investing. If there is an easy way, we would all be doing it, and that's why it's just hard to beat the overall market or beat the overall experts. So long-term investing is certainly the way to go. I personally love the idea of dividend investing just because of the overall growth potential with dividend investing. It just compounds over time. Now, here's the thing. I'm going to go ahead and share with you guys a compound interest calculator here, because I think this does a great job as far as showing us why it's so important to go ahead and stick with a strategy. And guys, here's the thing. With this compound interest calculator, it's going to show us, while investing in the stock market, if you invest for the long term and you just let your money compound over time, you can actually make a lot more money. But the hardest part about this is to go ahead and get started and to go ahead and stay consistent with this type of strategy. So let's go ahead and use this example here and use this calculator. Now, let's just say that we go ahead and invest $1,000, and that's our initial investment. As far as, let's say I'm going to go ahead and start investing in the stock market today, I'm just going to go ahead and deposit $1,000, and then let's say that we're going to go ahead and dollar cost average into the stock market. So every single month I want to go ahead and deposit, let's say, another $250. So I'm going to go ahead and deposit out of my paycheck $250. I'm just going to go ahead and save that and put that to the side and invest that every single month consistently. Now, I'm not looking to retire for another 30 years. So as far as my time span, it is going to be for the next 30 years because I still have a long ways to go as far as my retirement. Now, in regards to investing in the stock market, on average, if we look at the last 30 years, the average rate of return in the stock market is anywhere between 9 to 13%. So I'm going to go right in the middle, and we're going to say that we are going to see an interest rate increase by 11% every single year, or just on average over the next 30 years. So now, as far as the compound effect, we are going to say it is an annual compound effect, even though as far as dividend-based stocks, they do pay you on a quarterly basis, but we don't have that option here. So guys, here's the thing. If we just look at this chart, now in regards to our balance in this portfolio, our principal balance, as we can tell, in 30 years was $91,000. That's how much I invested in the stock market in a 30-year time frame. That's by investing $250 every single month. Now you can go ahead and change this, and I'll go ahead and add this link for this calculator in the description below. But if we invested $91,000 with the compound effect and with the average interest rate in the stock market, I would have gained $529,523 just by investing $250 every single month or investing $91,000. That's a crazy return. That's because of the compound effect. Your money is making you more money. And hey, why do they say the rich just keep getting richer? That's because they're investing their money and they're just letting their money earn them more money with the compound effect. Now, in this example, we would have $620,000 in our account in 30 years from now. And as far as if we just looked at the dividends on this, if we have $620,000 and we just go ahead and look at a 5% interest on that, I'm going to go ahead and pull up a quick calculator here to show us how much we would have just coming in by just leaving our money in the stock market and just living off of the interest. So as I pull up my handy dandy calculator here, if we go ahead and take $620,000 and we say that we're going to go ahead and collect a 5% dividend from our investment, so I'm going to go ahead and times that by 0.05 here, we would actually be getting $31,000 in income every single year. And if we just divide that by 12, we would have an income of $2,583 that we can go ahead and live off of and basically just leave our money in the stock market and let it just keep growing for us. Now, here's the thing. Why this strategy is so hard for us to put in place is because we just want that upfront initial reward. And basically by waiting and by seeing this as a 30-year time frame, it's just something that our brains are just not wired to do. We want to see that immediate reward. And guys, this is one of the hardest reasons why it's so hard to go ahead and invest in the stock market. Now, additionally, I do want to go ahead and share with you guys two experts here, and as far as their strategy, because I think looking at their strategy and why they are where they are, it's because they've been investing and they focus on investing for the long term. So I do want to go ahead and share with you guys a video from Warren Buffett, as well as I want to go ahead and share with you guys a video from Peter Lynch. Now, these two guys are basically the gurus as far as investing goes. With Peter Lynch, his average annual returns were over 29.03% during his time with Fidelity. And with Warren Buffett, I mean, he's just a guru of investing. He's the third richest guy in the world, and he just focuses on long-term value investing and investing in companies that he understands. So let's go ahead and listen to what their overall strategy is.
7 years since I bought my first stock, and I paid $114.75 for 3 shares of City Service Preferred. But if you'd been a pension fund and you put $1 million into the S&P 500 at that time and reinvested it, during my investing lifetime, that million would have turned into $5.3 billion. You would have gotten, for every dollar you put in, you've gotten over $5,000 without ever reading a headline, an annual report. You didn't have to know accounting. You just had to believe in America. And you didn't have to pick the right stock. You just picked America. I go back and I point out that there were two 77-year periods before that. And that takes us back to George Washington getting inaugurated. And there wasn't anything here then. And now you have $108 trillion of household wealth in the United States. You know, we've got something that works. And that framework wasn't that we were working harder, it wasn't that we were smarter, but we had a framework that unleashed human potential. And just think of that, 3 77-year periods, one of which I experienced. And you couldn't help, but all you had to do was believe in America.
So here's the thing, guys. I mean, Warren Buffett, the guru of investing, is clearly telling us what's the secret behind investing. And why is it so hard to go ahead and just invest? There is no secret formula here. I think we all just make it seem like it is harder than it really should be. Investing in the stock market for the long term is the best way to go. If you believe in America and you believe in investing in stock and you believe that the overall economy is going to go up, just invest. Invest in stocks that you use on a day-to-day basis. And that's basically been my overall strategy, is just investing in stocks that I know and I believe in. And just give it time, because at the end of the day, that is the biggest issue, and that's what I believe is the hardest part that we all face when we're focused on investing in the stock market or focused on a particular type of strategy like dividend investing. The longer you invest in the stock market, the more money you'll eventually have. But I love Warren Buffett's advice here, because in regards to just investing in the stock market, it's not that confusing, and we really shouldn't make it any more confusing. It's just betting on the overall economy and just having time on your side and let your money go ahead and compound over time for you. Now, additionally, I want to go ahead and share Peter Lynch. Now, Peter Lynch is one of the wisest investors out there. His returns kind of blew the market out of the water. On average, in the stock market, if you can get a 10% return as a financial advisor, that's an extremely good return. Now, Peter Lynch outperformed the market. His returns were actually on average 29.03% during his time with Fidelity. So let's go ahead and listen into what he has to say.
So, Peter, your investing philosophy is often summed up as buy what you know. And there's some truth to that, and it's also often way oversimplified.
Sure.
Can you explain what you did mean by that and what you didn't mean?
Well, it bothers me that people are very dangerous when they invest. This word play the market, that's a dangerous term. But if you do some work, do some research, know what you own, look at the research, look at the balance sheet. If you could add 8 and 8, get fairly close to 16, you can find out this company has lots of debt, no cash, they're in trouble. You shouldn't own it. So a little bit of research. People are careful when they buy a refrigerator, careful when they take a vacation. And they'll put $5,000, $10,000 some stock to hear on the bus or the party. That's dangerous.
So again here, guys, we are getting a similar message from Peter Lynch here as well. Buy into stocks that you're very familiar with. Buy for the long term. Why would you want to go ahead and play that game when you don't know anything about the companies? This is the hardest part of investing. It's just not practical to go ahead and play the game or to go ahead and day trade in the stock market because we're listening to other people. If we understand what we're buying, okay, just like he mentioned in this video, if you're going to go buy a refrigerator tomorrow, you're going to probably go ahead and do your research. At the end of the day, look at different options out there and determine, hey, this is the right type of refrigerator. You know, these are the things that I wanted in this refrigerator and whatever may be around this. So you're taking the time to go ahead and do all your research when you're buying a refrigerator. Why would you not go ahead and do the same thing when you're going ahead and investing in a particular company? At the end of the day, I mean, if you're spending $5,000, $10,000, $100,000, whatever it may be, and putting it into a particular company, you should always know what you're investing in. And there's another point that he does make here that I just want to go ahead and share that with you guys here as well.
Market's gone up tenfold since I stopped running Magellan. So you make more money on the upside. The market's going to be a lot higher in 10 years from now, 20 years from now, 30 years from now. Trying to predict the market is really a waste. I don't know what it's going to do. It can go down. When I ran Magellan, 13 years, it declined 10% or more, 9 times the market.
Wow.
I had a perfect record. I went down more than 10% every time. Whatever the market went down, I went down more. But over the long term, the upside is more than the downside. So you're going to say to yourself, do I need the money in the next month? Do I need the money in the next year? Do I have kids going to college? Do I have a wedding coming up? Then you're a bad investor. If you can keep putting money in, you have 5, 10, 15, 20, 25-year you should do well.
So I mean, here we go again. Exactly the same point here is invest in the market for the next 5, 10, 20 years and invest the money that you actually don't need. If you're investing money that you're going to need in a year from now, in 2 years from now, that's a waste of your money. Because at the end of the day, you want to go ahead and let that compound effect go ahead and compound over time. Now guys, Peter Lynch is a guru that I love following because his overall investment strategy, and I mean, he's really proven to be one of the best investors out there. So in general, from both of these guys, from Peter Lynch and from Warren Buffett, we are basically hearing the same message, is to go ahead and invest in the stock market for the long term. Invest money that you are willing to go ahead and lose on the downside. But if we go ahead and look at the overall analysis of the stock market, on average, the stock market tends to always go up. So the longer you're in the market and the longer you're in the game, the better your returns are going to be and the better your odds are going to be that you're going to go ahead and make substantial amount of money in the stock market. Now there's a quote that I personally always use, which is, it's not about timing the market, it's about time in the market. But guys, that is basically gonna be everything to sum up in regards to my opinion on why I believe it's so hard to invest in the stock market. So hopefully you guys enjoyed this video, and if you are new to this channel, I do focus on sharing with you guys my overall advice and my tactics and strategy in regards to my portfolio. I'm fully transparent in regards to this portfolio. I will have a link down in the description if you do want to go ahead and check out all the 52 stocks that I currently hold in this portfolio. You can go ahead and check out that link in the description below. And additionally guys, I do use M1 Finance because it's one of the best platforms in my opinion for a dividend based investors that's focused on long-term investing. M1 Finance is the best platform out there for this. If you're interested in that, there's a $10 affiliate link in the description below, so check it out if you're interested. But thank you guys for watching this video. If you're new, don't forget to subscribe to the channel down below. And honestly guys, one thing that I just ask for is if you don't mind just smashing that like button, as it really does help keep me motivated to keep producing content like this. But thank you again. I will see you guys at the next one.